Okay, you can start, sir.
Right, sir. So good evening, all of you. I had already said this. Hope I'm audible and my presentation is visible. How about your preparations?
Going fine, madam.
Right, sir. Happy to know that. And actually, we are planning to cover all your doubts and clarifications to be made in this 1 hour. So if you have any queries or if you have any confusions, you can come forward it. Otherwise, we'll go through a presentation. I have selected a few questions. We'll work out those questions. So are you comfortable with the numerical side?
Yes, ma'am.
Is the equations okay? Are you familiar with the equations? Have you mucked up the equations to finding out the GDP, national income level, etc.? Is that part okay? Can I respond? Then numerical session. Second half is being from the budget side. You have to find out what are the various deficits. That is another numerical area where you can expect questions from. Then you have one from the money supply level. That is a sure short question, which is inevitable in nature. You have to find out the various money supply aggregate levels. Okay, you have to mug up the equation so that you can find out the answers directly and don't miss the marks of that question. Then there is a part where something is related to more of theoretical in nature. One is from the demand supply side, second is from the theory of interest area, and another one which is related to that of monetary policy, fiscal policy, and one more is left with that of business cycles. So this is the common thing or the entire subject matter or the area which has been covered through your economics analysis of ABM part. So if any confusions are left, you can convey it. I'll try my maximum to clear your doubt. Is everything okay?
Yes, ma'am.
Okay. So I suppose it is better that I go through the questions, right? I should get all the answers. Like we are having like 19 plus participants here. I should find your answer in the comment box. Please don't shout out your answer. Put your answers in the comment box, okay? And I've selected numerical questions, basically numerical questions, so that you will have a little more practice on the areas. Fine. Okay, I'll go to the screen. I hope it is visible.
Yes, ma'am. Yes, ma'am.
Right. First question is related to national income aggregates. You are supposed to find out the operating surplus. Okay, one question. Can somebody give me what method should be applied so that we can find out operating surplus from this question, from these values?
The slide is not being shown.
Madam, that particular slide is not shown.
Not visible, sir?
Yeah, only the introductory slide is visible. That's all, madam.
Okay, just a second, sir.
Yeah. Now
Yes,
it is
now
visible.
it's visible.
Rent is given 120, profit 200, domestic income 800, mixed income, wages and salaries, indirect tax, subsidies and depreciations are given. What method should we apply to find out operating surplus here?
Expenditure method, ma'am.
Income method. No, it is income method. Income method should be applied so that we can find out the operating surplus. Please put your answers in the chat box. I'm sorry, sir, that is not the answer. Now, what is the equation to find out to find out NDP at factor cost using income method? How can we find out net domestic product at factor cost using income method?
CE plus OS plus MI.
Yeah, compensation of employees plus mixed income plus operating surplus.
Operating surplus.
Yeah. So here, I'll give you a hint. What is the amount of NDPFC here? From the figures, can you identify the net domestic product at factor cost? Give me the value of NDPFC from the figures. Sati sir, if you are conveying something, it is not audible, okay? It is blurred. Why no answers? I'm asking a question. Which of the following figures that has been displayed here gives you the value of NDP at factor cost?
At this point of time, we look forward more answers from your side.
Yeah. Yes, sir. Please
Whether
don't
it
remain
goes wrong,
silent.
yeah, whether it goes wrong or right, you try and give the answer.
See, but all the other values have been given you as it is, right? Rent has been given, profit has been given, every inputs have been given. So how can you identify net domestic product at factor cost from these figures?
Are you all trying? Are you all working on this? Somebody respond. What is this? Are you all trying for the answer?
Yes, sir. Yes, sir. Try.
Guru Raja, yeah, everybody at least try to do it. Ramesh, Nandini, 1440.
1440 is the value of net domestic product at factor cost. No, ma'am. See, I'm asking you, I did not ask you to find out or calculate NDP at factor cost. See, they have given you rent, profit, mixed income, wages, salaries, indirect taxes, subsidies, and depreciation. What is not actually included in the three components which we had discussed in the classes? Have you seen domestic income? Can
Yeah,
you find
that is-
800 units of money that is being calculated as domestic income in the figure? That is your net domestic product at factor cost. So when you add compensation of employees, mixed income, and operating surplus, that will be summed up to net domestic product at factor cost. Now find out the value of operating surplus.
Akila, Amruta, try. Give some answer. Anju, Bhagirathi, Gautam, Jalaja, Jayasri, what happened just now? Pratibha, Ramesh,
Correct, sir. Correct, ma'am. Amrita, ma'am, you are correct. 180 is the answer. See, they have from operating surplus. Can somebody give me what are the important components that comes under operating surplus? One is in the form of entrepreneurship and the second one is in the form of
Income from property.
yeah, income from property. So
Domestic
income from
income
entrepreneurship is already given as profit, but they have mentioned only about rent, which is 120. We are not sure whether they have included royalty or any other inputs from the property, right? So in order to find out that, I'll take this slide. In order to find out that value, it is better that you deduct domestic income. It is better that you deduct wages and salaries and mixed income from the domestic income value. So domestic income is 800, which is equal to NDP at factor cost. And from there, you will deduct your wages and salaries and mixed income. Answer is equal to 380 crores, of which profit and rent is already included. Okay, but your question is find out operating surplus, value of operating surplus. So answer is B, which is equal to 380 crores or 380 units. Is the question okay? Clear?
Yes, ma'am.
Okay,
please
shall I move on to the
respond.
second one?
This is sure question. Please respond. Say yes or no.
Ma'am, please explain once again, madam, please.
See, sir, this domestic income is actually equal to net domestic product at factor cost. Fine, this is equal to domestic income. Fine. See, when you have to get domestic income or NDP at FC, it should be compensation of employees plus operating surplus. Okay, operating surplus plus mixed income. Here, they have given you compensation of employees value, operating surplus has to be found out, and mixed income value is already given. Fine. So how can you find out operating surplus if COE and MI is given and domestic income is given? How can you find out the answer?
Subtract.
Domestic income minus
You
CO.
can deduct COE and MI from domestic income so that you will get operating surplus. Same has been done here. Okay, the only problem was you were finding it difficult to identify domestic income. Clear? Here domestic income is nothing but it is equal to net domestic product at factor cost.
Okay, ma'am.
Now is that okay?
Okay, ma'am.
Right. We're moving on to the next question, right? Question number 2. From the below figures, please find out the value of GDP at market price. Now, what method has to be applied? Which method is suitable here to find out GDP at market price?
Income.
What method?
Income method, ma'am.
No. Please find out go through the ingredients and find out. What method is suitable? Expenditure method, right. Expenditure method is a suitable method to find out the value of GDP at market price. Okay.
consumption.
Yes, ma'am, it is correct.
Sadish, give the answer. These two are sure questions for you. The last one and this one.
No, Amrita, ma'am, can you just find out where you have committed the mistake?
12,800, ma'am. I typed as 30.
Ah, okay, okay, right, ma'am. So C is the answer. I'll go through that slide. How can you find out GDP at MP using expenditure method? What is the equation?
Nandini? No reply from Nandini.
Ma'am, consumption.
Yeah, consumption
Plus public.
plus investment plus
Income, government spending.
government spending plus
Export minus import.
Less minus
net
exports.
exports minus imports. This will be equal to GDP at market price, right? Now here the question is bit twisted. You can find here they have given you personal disposable income and personal saving. From there you have to identify the consumption done by households. How can you find out C value from these two components?
8,600 minus 1,500.
Very good. So 8,600 minus 1,500. This is your disposable income, total income of an individual. And from there, you have to deduct the savings. So whatever is left after making relevant, keeping apart for savings, remaining will be left for consumption. So consumption is equal to 8,600 minus 1,500. Fine. See, personal disposable income minus personal saving, plus you have got the net exports, plus fixed capital formation, plus change in stock of business activity, plus government consumption. This is equal to 12,800. Is this okay?
What is this change in stock, ma'am?
Change in stock is addition made to the stock, sir. So the business enterprises would have invested some extra money for bringing about expansion in their business activity. So fixed capital formation, you have to add change in stock so that you can get the total I of business activities. Is that okay?
Yes, ma'am.
Okay. So same question, same values. Third question, you have to find out NDP at market price. Yeah. What should be done to get net value from gross value?
NFIA should be less.
No, ma'am.
Depreciation should be less.
Depreciation should be deducted. If you are having gross value, you have to deduct depreciation from the gross value. Here, they have not directly given you depreciation, but instead they have given, I suppose they have given like consumption of fixed capital. Yeah. Consumption of fixed capital means it is the depreciation value. Okay. So answer for this one is the B option, 12,350 rupees or 50 units. Any confusions? Are you all good?
Yes, ma'am. Next question.
Okay, next question. I'm not wasting your time. This is a direct question. Economics is a science. The basis of this statement does not include.
C.
C, everybody is going for C. I'm sorry, the answer is D. Economics as a science, it does not include theory. Okay, economics includes theory, but as a science, it does not include theory. Of course, economics conducts experiments, but unlike your science experiments, it won't be done in a lab. It will be done in a market, or behavior of an individual can be treated as a experiment. Okay, so option here is D. Fine. Next question. Right. This is not included as such, it is not included in your syllabus, but you can expect a few questions from these areas also. So I thought this would be appropriate to introduce. Find out an industry which is commonly known as a monopoly. Yes, monopoly means that kind of a market where you will have dash number of sellers.
Few number of sellers.
No, monopoly.
One.
Only one single seller is the the highlight of monopoly. You will have only one seller. So you can find any kind of industry where you will have only one seller. Cigarette industry has got a few number of sellers. Publishing industry has also got a few number of sellers. Drug industry has also got a few number of sellers. Electricity in India, more or less, you have got only one seller. Okay. Best example, we have state level electricity boards, especially in most of the states of our country. They follow state level electricity boards. So we have only one seller, except a few states. Not more than 3 to 4 states. All other states are having single seller who is dealing with the production, distribution of electricity. So answer here is D. Okay, electricity is said to be a monopolist. Fine. Next question. Question number 6. Rate of discount which is used by RBI for rediscounting commercial instruments from the bank. How come, Amrita ma'am, D is the option? Reverse repo is how commercial banks place their extra money with the Reserve Bank of India. D will never be the answer. Reverse repo is commercial banks giving money to the central bank. I would have gone if it is, I would have agreed even if you had given A, B, C. D is a not at all the correct answer. Please be very careful. A, B, C. Of course, I told you D is not the answer. Why mixed answers? See, you are those people who are actually coming from this what profession or this area. So you should be very familiar with these kinds of components or these kinds of syllabus part in economics. I only have textual knowledge. Answer is B, correct answer. Those who are given B as the correct option, that is your correct answer. See how to identify bank rate as the correct answer. Whenever they are mentioning rediscounting. I told you, I had been telling you all throughout the classes, bank rate is a rate at which all commercial instruments or bills of exchanges are rediscounted. Why? Because at the initial stage, it might have discounted. It might not might have. It had already been discounted once. Once again, when it is being parted with the Reserve Bank of India, RBI rediscounts the already discounted commercial instruments. That is a what link, or that is the strategy or trick you can identify the bank rate. Bank rate is a rediscounting rate. Okay, repo rate is a discounting rate. MSF to a certain extent is also another discounting rate, but bank rate is said to be the rediscounting rate of getting money from RBI through bills of exchanges. Is that okay now? Please don't commit the same mistake again and again, right? Am I clear to you?
Yes,
Can
ma'am.
somebody respond?
Yes,
Is
ma'am.
that
Yes, ma'am. Yes, ma'am.
right? So moving on to the next one. Answer for the sixth question was bank rate. Seventh question. Which of the following is used in the process of neutralizing the effect generated by foreign exchange flows in India? Yeah. What is the full form of MSS?
Market stabilization scheme.
Yes, market stabilization scheme is the method or the practice adopted by Reserve Bank of India to control our exchange rate. Okay, too much appreciation of our currency and too much depreciation of our currency does not do good for the economy. So MSS was introduced and it is maintained by lending money or lending from the foreign exchange reserves or taking back excess flow from the economy to the foreign exchange reserves, and thereby we can control the exchange rate. Fine. So MSS is the answer for the previous question. Next question is another numerical question. Fiscal deficit is 9,000 and interest payment is 900. Find out the primary deficit. Jayashree ma'am, can you give me the equations to find out primary deficit? Jayashree ma'am? Jayashree ma'am, am I audible to you? Okay, what is the equation to find out primary deficit?
Fiscal deficit minus interest payment.
Yes, it is. When you are deducting interest payment from fiscal deficit, you will get the primary deficit. So, answer is B, 9,000 minus 900, 8,100 is the answer. Yeah? Fine, right? Shall I move on to the next question?
Okay.
Otherwise, I suppose Ajay sir is... Ajay sir, am I audible to you? Can you mute yourself? Okay, next question. Compute from the following values. Why different answers? One two eight double four 3.8. Yeah, adding all the values, right? How can you find out M3? Can somebody give me the equations to finding out M3? How can you find out M3?
M1 plus
M1 plus
time deposit equal.
M1 plus time deposits of the commercial banks will give you the value of M3. So here you have currency with the public, demand deposits with the commercial banks, and Reserve Bank of India's other value, other deposits. Fine?
Madam,
Yes,
kindly see the question, madam. Kindly.
Yes, sir.
Currency with public, demand deposit with banks.
Yes,
And
and time deposits with the commercial banks.
Madam, other deposit RBI is to be included, madam.
Other deposits with the RBI, it is equal to M1, sir. Yes, you have to add M1. See, M3 is equal to, I have not added time deposits. Now it is okay.
So how amount is 122,443, madam? Is it correct?
128,443.8, 3.8, sir.
Sir, madam, you have given all the amount to be added, madam.
Yes, sir. See, currency with the public, demand deposits with the bank, and other deposits with the bank. When you add the first two and the last one, you will get M1.
Okay. Then time
Okay.
deposit.
Then you have to add time deposits with the bank with the M1 so that you will get M3.
Okay.
Clear?
Okay. Okay.
Right, sir. Any confusions?
Ma'am, one question.
Yes, sir.
Is currency with public and money circulation is different, no, ma'am? Concepts.
Currency with the public and money?
Money in circulation.
No, both are the same, sir. Currency with the public and money in circulation is the same.
Both are same, ma'am.
Yes. All right. Moving on to the next one. In India, the policy rate refers to Mixed answers again. Can you cross-check whether A is the right answer? See, the bank rate prescribed by the RBI in its half-yearly monetary policy. Do we have half-yearly monetary policy? What is the duration of monetary policy?
Bi-monthly.
Bi-monthly, once in 2 months. Okay, so first statement you can ignore. What about the remaining 3? CRR and SLR prescribed by RBI. Then you have fixed repo rate, which is meant for sovereign securities, and fixed repo rate, which is meant for overnight of MSF. Here, policy rate actually denotes the fixed rate of repo with respect to LAF. Okay. C is the answer. Fixed repo rate to be quoted by sovereign securities in the overnight segment of, what is LAF?
Liquidity adjustment
Yeah,
facility.
liquidity adjustment facility. Correct. Fine. Question number 11. Elasticity, to find out the value of elasticity. Correct. 3 correct answers. Correct, ma'am. Yeah. So you're familiar with how to calculate the level of elasticity or value of elasticity. So change in quantity is 100, change in the price is ₹6, multiplied with the initial price is 30 and initial quantity is 500. So this will be equal to 1. Answer is A, price elasticity is equal to 1.
Ma'am,
Fine,
can you
most of
please
you have-
repeat the equation, ma'am?
Okay. 1 second. How can you find elasticity? Elasticity is equal to change in quantity demanded divided by change in price of the commodity multiplied with initial price of the commodity divided by initial quantity demanded. Okay, so change in quantity demanded is 100 units. Change in price is 6 rupee. First quantity that was bought was 30 units. No, first price that was charged was 30 rupees. And what quantity was bought at rupees 30? It was 500. So when you find out the answer, it will be equal to 1.
Ma'am, once just show the question, ma'am.
Okay, okay.
Okay, ma'am. Thank you.
Right. Can I move on to the next one?
Yes, ma'am. Yes, ma'am.
Right. Question number 12. The fact that wants cannot be fully satisfied with the available resources reflects the definition of dash. Right. Scarcity definition. Can you give me the name of the economist who came forward with the scarcity definition?
Lionel Robbins.
Lionel Robbins.
Lionel Robbins. Who came forward with the wealth definition?
Alfred
Adam
Marshall.
Smith.
No,
Alfred
wealth.
Adam Smith. Adam Smith.
Adam Smith.
Adam
Right.
Smith.
Adam Smith. Welfare.
Alfred
Marshall.
Marshall.
Growth definition was introduced by
P.J. Samuelson.
PSM. Right. So answer for this question is C, which is scarcity definition put forward by Lionel Robbins. Fine. Next question. Question number 13. If income decreases or price of a complement rises, options are related to changes in the demand curve. B, A, mixed answers. Again, B. Okay. What could be the answer? A is the answer. See, this is the hint. If income decreases, to which direction will the demand curve shift? If income decreases, to which direction will the demand curve shift? Leftward. Same way, if the price of the complement rises, will you choose your commodity more or will you choose it less? If the price of a commodity, a complement increases, will you choose more of that commodity or less of that commodity?
Less of that.
Less of that commodity. No? So obviously the demand curve will shift to the left. Fine. At the same time, you can find demand for a normal good shifts to the right. It takes place only if income increases, the price of the complement falls. Then if government is relaxing its policies, then you have the value of the substitute goods has increased. All these causes rightward shift of the demand curve. Same way, upward and downward movement of the demand curve is only due to change in dash.
Price, ma'am.
Okay, very good. Change in the price alone is a reason for upward and downward movement of demand curve. Other factors are actually causing the shifting of the demand and the supply curve. Is that concept okay?
Yes,
Yes,
ma'am.
ma'am.
Any
Very clear,
confusions with the
actually.
question? So answer for this question is A, where the demand curve will shift to the left side. Next question. Scatter diagram is used to study the dash in economic statistics. Though it is related to statistics, you can just identify it along with economics. Scatter diagram. What is scatter diagram related to? Correct. It is answer B. Scatter diagram is a very important method of identifying the nature of correlation. They will exhibit whether there is correlation or not depending upon the diagram. Okay, you have to learn correlation, I suppose, in your statistics. Fine. There are different methods of getting the correlation value, one method, graphical method of expressing the correlation is through scatter diagram. Okay. I suppose I have only one more question that is left. Status symbol goods are. Status symbol goods are Veblen goods, exception to law of demand, goods of conspicuous consumption. Okay, for your kind information, goods of status symbol or prestige goods are also known as Veblen effect. It was introduced by Thorsten Veblen. So we are giving the name of Thorsten Veblen to status symbol goods. So those goods can be also known as Veblen goods. So answer will be all of the above. D will be your answer. Okay, Thorsten Veblen. Thorsten Veblen was a person who identified that demand law of demand cannot be applied if the good is conspicuous or prestige in its value. Those who are looking forward to purchase luxury commodities or goods of prestige value, they are not considering the change in the price. They are going to take it even if the price drops or price increases. Clear? So the prestige goods name is attached with Thorsten Veblen. So that answer for that question is option D, all of the above. Fine.
Good question. Archana, will you be sharing this modified PPT with your answers to me now so that I will share with them?
Okay, sure, sir. I'll do that.
Now, thank you, Archana. Participant, now it's an open forum. If you have any questions to ask, please do that. This is the best time for you. Next, you will be writing the exam only on economics. Please.
Please come forward with your doubts.
Please come forward. Whatever be the doubt, please come forward.
Ma'am, is it possible to explain that shift in demand and shift in supply?
Yes,
Just
ma'am.
brief,
Yes.
like.
So I'll be sharing another tab. I hope it is visible. Just a second, okay? Just a second. Fine. So we have two changes in demand, right? I hope the screen is visible, right?
Yeah.
Board is visible. Okay. You have two changes in demand. One is due to the change in the price alone. When price is being changed, we assume that all other factors remain constant. This is an assumption. Other factors remaining constant, we bring about changes in the demand curve due to change in the price alone. This causes demand curve to expand and contract. This is the first situation: expansion or extension, another name, and contraction. Fine. The second change can happen due to change in other factors, whereby we assume price remaining the same. Price remains the same. This kind of change in demand is known as shifting of the demand curve. Right? When price is the reason for change in demand, we have the downward sloping curve. When price is higher, obviously due to the application of law of demand, you have lesser quantity demanded. As and when price falls, you have more quantity being demanded. Right? So movement of a consumer from higher point to a lower point. That means due to decline in the price, if the consumer is demanding more of the commodity, this leads to what is known as expansion of demand. Okay, this is known as expansion of demand. Fine. Same way, if we are moving in the opposite direction, opposite direction means if due to increase in the price, the person is demanding less of the commodity, this is known as contraction of demand. So expansion and contraction is mainly due to change in the price, and we assume all other factors remaining constant. Clear? Second half is there is a chance of the demand to shift irrespective or whatever the price is like, irrespective of change in price. We assume that price will remain the same. So there is an option for the consumer to consume Q1 quantity, or he can go for even higher quantity of that commodity, or he can purchase less of the commodity with the same price. Okay, he can go for Q2, Q1 or Q3 without bringing about any change in the price. So if he is purchasing less, Q3, this causes the demand curve to shift to the left. What could be the possible reasons? Shifting of demand curve to the left, the possible reasons for this shift can be?
Decrease in income.
Very good. Decrease in income of the consumer. Fall in the price of the substitute goods. Size of the family might have reduced. Government might have put some higher restrictions, or we can give other important economic policies might have introduced in the economy. This causes the leftward shift of the demand curve. Same way, all these factors, if they are moving in a positive manner, that is, if income of the consumer has increased, size of family might have increased, then price of the substitute good might have gone up, government might have relaxed certain policies, all these causes demand curve to shift to the right. So leftward shift means decline in the demand, and rightward shift of the demand curve means increase in demand. Is that okay? The same thing being applied for supply, but the supply curve goes positively sloping. Okay, supply curve is upward sloping. Same reasons, not same reason exactly, but you have rightward shift of the supply means increase in supply. Leftward shift of the supply curve means decrease in supply. Okay, same notations, but factors that influence supply is quite different to that of demand. That is the only reason you have to find out. Clear, ma'am?
Yes, ma'am. Thank you so much. Yeah.
Okay. Any other thing which I can do for you?
Ma'am, if you don't mind, in short, can you explain IS and LM curve, ma'am?
Okay. See, we have IS curve, which is a downward sloping curve that gives a relationship between rate of interest and level of income that is being generated in the economy. Fine. This is IS curve. Now, what does actually IS means? How a goods market or a product market will react whenever there is a change in the rate of interest. See, borrowers, especially the business people, they will be interested to borrow more from the financial institutions when rate of interest is high or less.
Less,
right? Less. When rate of interest is less, they would be happy to get more money from the financial institution and invest that money in the banks, in the business activity. So when they are investing it, level of income that is being generated in the economy will be higher. When market rate of interest goes up, you can find least interest from the part of business people to borrow money from banks, and they will, due to this reaction, the level of income that is being generated in the economy will fall. This is the reason why we are having a downward sloping IS curve. Fine. LM curve is upward sloping because this is considering the money market situation. How will money market react to rate of interest? People or financial institutions who are supplying money will be happy to do so only if rate of interest is higher, right? Same way, they will be happy to provide the supply of money only, they would be not so happy to provide the supply of money if the rate of interest is high, sorry, low. Okay, that is the reason why we are having an upward sloping LM curve. You can consider LM as supply of money. How will supply of money react with change in interest? If rate of interest is higher, money supply would be higher. If rate of interest is lower, money supply would be lower. So this amount of money, when it is made available in the economy, that amount of national income will be generated. Right? So this causes the intersection of IS and LM, whereby you can find out the market rate of interest and equilibrium level of quantity being quantity of income or volume of income that is generated in the economy with the existing rate of interest level.
This is our demand and supply curve is similar.
Yeah, very similar to that of the classicals. Classical's rate of interest, which was related with the demand for money and supply of money. Very similar to that, but make sure that IS curve is downward sloping and LM curve is upward sloping. That is all what.
Okay, ma'am. In demand, I mentioned in demand curve and supply curve.
Okay.
This is similar to that curve.
Yes,
IS curve is demand curve
and LM curve is the supply curve.
Supply curve.
Correct, sir. You can relate with that concept also, and so that this would be easy for you to understand. Fine.
Is it okay? Can we close it with anyone? If anyone wants some clarification, we are open, but still. Anything?
Okay, sir. Okay, sir.
You are all okay already. Any doubts in your mind? Archana ma'am?
No, sir. I just want to convey my best wishes to all of you. Please do convey your results to me.
Kindly post problems of GDP and elasticity problems.
Okay, sir. I'll do that.
So something confusion is there. I have equation of already know, but data is given so confusion, which is to
okay. So you can contact me if you're free. You can contact me, sir.
Okay, ma'am.
Right.
Okay, I personally contact you. Sir.
Okay, that would be better, sir.
Okay.
So all the best for you. Do well for your exam. Please prepare well, and if you have any confusions, please feel free to contact. I am available in WhatsApp. The same number is available for telephone calls also. So convey your results also.